Welcome back, everybody. If you're new here, thanks for joining. My name is Jack, I'm from Clover Trading, and today I want to talk about entries versus exits. What makes them good, what makes them bad, how we can use them to our advantage to make better trade plans, hopefully find a better edge with better risk reward in the market. If any of this information makes sense to you, you enjoy it, you get value from it, make sure to like and subscribe. It helps us out, helps the algo, and it lets us know, most importantly, what we're doing right, what we can do better. Also comment if you would like to. All right, it really doesn't matter if you are trading from the long or short side. If you have a bad entry, you're going to have the same sort of emotions because after all, it's not what bias you have, it's how much you are risking and are you afraid to lose? Are your emotions coming into the market when you're making your trade plan? If you have a really good entry, we can probably weigh that you will have a more profitable trade in the end. If all things being equal, it's very hard to say this in like a concrete way because the market is so random and there's always different things happening. So we'll go from a long perspective. If you enter lower than a person that's chasing up here and you both sell at the same place, the person that entered lower is going to have a better profit. He's going to have more dollars per share. We're going by that because the person that enters higher, they could have more shares and maybe they make more money. But from a totally neutral standpoint where it's dollars per share, the person that enters lower will have more money. And if someone enters here on the long side and somebody enters here, but they both sell down here, the person that enters at the more or the less risky time, which is lower, then he will have less of a loss, all things being equal, talking about dollars per share. And in addition, I've noticed that when I have a better entry, I will have a much more clear mindset. I will think more clearly, whereas if I chase a stock long or something, and then it starts pulling back, I'll say, oh no, I just bought the top and the bottom's gonna fall out on me, and then I'm gonna have a bigger loss than I normally would have if I just had the more patient entry. Let's talk about this example here, SPRB. And this is pretty much what I was just talking about. I'm only bringing the chart up as like an illustration. This is no indication of how I would trade it or what I would do with the stock. It's simply just to look at the prices and see the difference. If somebody entered here on the short side because it went down, so we're going to say short at 2.95, he has risk all the way up to 3.38 if he's holding all the way here, if he's not actively stopping out when the stock goes against him, if he's not locking in any profits, simply just covering at the top, he has about 50 cents of risk or so. And if somebody entered up here, he has significantly less risk at 20 cents. But if they're all holding and they cover down here, the person that was short from 2.95, he's risking 50 cents to make about 35 cents. If somebody entered short from about 3.2, it's about 20 cents to make, where did we say it was? About 2.5? So it'll be about 70 cents of gain. And then you can immediately see that the risk reward is going to be much more favorable to the person that was having a higher risk. Now the trouble is that we don't really know where the top is. This one could have been a top, this could have been a top, this one was the top, or maybe it held here and it squeezed higher. So we really don't know, and that's why it's important to make sure that you have the risk and you're not just stubbornly holding anything. And by having a better entry, then you will be able to manage your risk more effectively than somebody who's chasing all the way down here. And maybe someone didn't put on the position at the open and they waited all the way until about 9:45, 9:50, and they said, okay, FOMO's getting the best of me, I'm just going to hit it short at 2.45. So now they have risk all the way from 2.45 to 2.72. That's nearly 30 cents of risk, 28 cents, 27 cents. And they only have a max gain of about 24 cents. So that's less than 1-to-1, and that's very unfavorable just because of FOMO. Whereas if you just waited for a bounce, maybe you shortened like 2.65 and you're risking about 2.77, maybe 2.8, maybe 2.9, but that's about 20 to 30 cents of risk, and there's about 40 cents of potential gain there. But with slippage or where you cover, maybe it's more like 30, 35 cents. Even though that's not like a great trade, it is much, much more favorable than giving into FOMO and shorting down here, having a bad entry, and risking all of these bullets that I was listing in the earlier section of this video. Because if you have a bad trade, your risk can be larger if the position size is not adjusted and you maintain the same risk level. Your potential profit can be smaller and you'll have more emotions involved. I can tell you anytime I've given into FOMO and I would short something like 2.45 down here after a huge unwind, I would probably be getting squeezed down into like these pops and taking a random loss. And it's just very unnecessary. One note on entries that I would like to make is that I like to keep it in 1 to 2 trades max. Those are usually where my best trades are coming from. I find that if I plan for like 5 different trades to enter a stock, then I'm going to be getting much more sloppy and maybe I will be more susceptible to FOMO because I'll think a stock is cracking and I'm a short bias trader for the most part. So I'll add into the weakness and then the stock will come back, I'll get scared out, etc. And it's a nasty trap. This is really just an example to illustrate what I was discussing. So let's move on to exits. There are often times when I am trading and I'll put on the position, the stock will be going in my favor, I'll be long or something, it will be going up. But if I don't lock in my profits, then I'll often find myself in a situation where maybe I'm holding out for a couple thousand more dollars on my position as like a profit. So let's say, for example, going from $10,000 to $12,000 total. So it's only 20% more gain. But if I'm wrong and that was the top, then the stock can retrade, and often I'll give back maybe $2,000, $3,000, or $4,000 to $5,000 on the trade. So there's really not much rationale behind doing something like that, because you're only wagering 20% more gain potentially for 50% less profit. That's kind of when the risk reward becomes very unfavorable for you. That's why it's so important to be proactive. Take some profits off the table. You can only make money in trading if you are paying yourself. If you wait till every trade becomes a loser, you will never make money. If you chase a stock down or up on your entry, then you'll be more inclined to exit out of the stock when it goes against your average. So like I said, if you short at 2.45, you'll be much more inclined to take your position off the table if you are short from 2.45 at like 2.6, 2.7, because you're saying, oh man, this stock is just going, what if it bounces all the way up to 3? Then next thing you know, you're down 50 cents a share. Let's sum up all the exits. Always be taking profit. So I said when I enter a stock, I like to keep it in 1 to 2 entries max. But when I exit, especially when I'm on the long side, I don't know how far a stock can go. So I'm always just locking in profits. And I'll usually make it into like 3 to 5 orders typically. Maybe even more if I have more shares than normal. Lastly, pay yourself, be safe, and always be thinking about what is the current risk reward of the situation when you're in a position. Because we think about it initially, but we often begin to write it off as the trade progresses, because owning a stock from 2.45 versus 2.7, there are very different positions and they have very different risk implications. So you have to be thinking about how the risk reward changes in those situations. That's all for today. If you liked what you heard, please drop a like, make sure to subscribe. We'll see you next time.